My fellow Kryptonians, Bitcoiners, traders of the cryptocurrencies so popular in our little ecosystem of a few 100 million people. So it's Sunday, and it's the 5th of January already. Kind of unbelievable, but that is what we're looking at. And what exactly is happening in the world of Bitcoin and altcoins? Well, the assets are moving along the VEPs very nicely. We've seen so far some nice little trending moves on lower time frames across Bitcoin and Litecoin and Solana and other good decentralized cryptocurrencies. And we're also seeing that happening because we have very, very tight central daily ranges across these cryptos. And in the case of Bitcoin, I think it's like 0.05% is the height of the central daily range, meaning it is very probably a trending day, and we have seen trending moves already. We saw a nice little one earlier today, my time around 9, between 8 and 10 in the morning, or 8 and 11 in the morning. Saw a nice little move to the downside, about 0.5% or so. Nothing huge, but very tradable. And then we saw a nice little move down there where it was walking along. Finally started to move back up in the last hour or so. Made its little move up and then headed back down. Last I saw it was on the way down, but anyway, looking good. All in all, for low time frame scalp, the upside and the downside on Bitcoin and Litecoin and Solana, like I mentioned. Other coins as well. Cardano, right? Ethereum, even if you scalp that. But all in all, yeah, looking like a very tradable day. And what does that mean for you? Well, it basically means that if you're trading the VEPs, you can trade the probabilities and statistics of the volatility and the entropy very nicely, as long as you know how to read the direction and make the relevant moves. If you don't know how to read the direction and make the relevant moves, it's going to be a lot harder because you don't have the leading information. Now, what else is happening? Well, on the bigger picture, if you zoom out from the low time frames and you zoom out from the daily time frames and you go all the way up to the weekly time frames, you can see that if the day ends up pretty nicely, like roughly where it's at or higher on Bitcoin and on Solana and on Litecoin, etc., on Cardano and on XRP, for example, then you are looking at, hello, nice to see you again too, SN. Then you are looking at a weekly range on all those coins that will be higher than last week. Am I live? I don't know. I think I'm live. Yes, it says I am. We were looking at weekly central weekly ranges on the VRE, setting up nice and a little bit higher than last week, all in all. And if we can get another nice tight central daily range across Bitcoin and some other cryptos, then tomorrow start off for a banger of a week with some nice trending moves on the day. Early on, maybe, but certainly in the run up to traditional market open, and probably again throughout the day. And we'll be doing our live streams in the Discord as usual at our new time, which is 11 a.m. U.S. Eastern Time. We do those now 7 days a week. The only day that we do it at a different time is Sunday, today, when we do it at 5 p.m. U.S. Eastern Time, which is right around when the futures market open, like the CME futures. And we do that on purpose because, well, it's obviously a traditional market. CME is a traditional market, and the futures also include the Bitcoin. open, so they do have Bitcoin trading on Sunday there at the CMEs, even though it's not a significant amount of Bitcoin compared to the overall broader market. It's something that a lot of traditional traders still look at for whatever reason. Yeah, we look at that at around that time. We also look at the new weekly information that's coming up. We have a very good ability to know what the likely central weekly ranges will be. Why? Well, because we use the volatility range estimator, the VRE of Alpha Trading. We know where our distribution ranges are on the plus and normal. We know where our likely central daily range, weekly range, central weekly range, and central monthly range are with the VRE. Well, we know where the central monthly range is because it's already been printed since the beginning of January. And we have a very good idea of where the central weekly range will be even ahead of time as we get draw closer to the new week. And we same thing with the new central daily range, right? We can estimate very accurately where it's going to be as we draw nearer to the day's close, barring any massive sudden movement, some incredible GBM. We will typically see that will be within a certain range, and we know that it is. And yeah, so that is basically what we're looking at the moment, right? We are looking at a potential for a trending week coming up, and potential for a nice way to kick it off with a trending day tomorrow. Even if it's not a trending week, by the way, even if it ends up being a ranging week, which theoretically could still happen if the central weekly range will be quite wide, depending on how the rest of today goes. But for now, it's looking like it'll probably end up being a ranging week. I mean, a trending week. If it is a trending week, there's a potentially huge move on Bitcoin. What do I mean by that? Well, by potentially huge move, I mean it could go up at least to new all-time highs at or above 108K, where it was previously in like mid-December, before we start to see that little decline and pull back from like 108 down to like 92 or whatever before it bounced back up. Now, could it bounce up even higher than that over the next week or two? Absolutely. Why? Well, because if the asset, which is still in mean reversion on the daily time frame to the 30-12 RMLR, currently above 100,000, it's like 100, I think 104,000 today, about 104, 106,000, something like that. If it continues to rise, and it takes some more days to get there, you could be looking at $120,000 mean reversion completion sometime by like 10 days from now, right? If that's when it happens. Of course, it could happen earlier. Price could still keep running up afterwards if the returns keep going that way, but we look to the mean reversion as a target on the daily time frame because that's where it's at. Now, can the price suddenly go to the downside if the returns pull it down? Yeah, absolutely. Can it do that before it completes the mean reversion? Well, obviously, because it's been in mean reversion now since like I think December 20th or something like that, and it has gone. The price has gone up and down since the mean reversion was in progress, and now it's going back up again. So it certainly isn't like it only has to go in one direction in order to complete that mean reversion, right? We can certainly see the price mean revert, as I told you at the beginning of the mean reversion, as I tell you at the beginning of every mean reversion, up or down, right? You can mean revert in continuation of the same direction you're going, right? If the price action slopes off and runs into the RMLR in the same direction, just one will be a bit steeper. The RMLR will be steeper than the price action, for a while, and then the price action will run into it, even in the same direction. That can happen. But hi, hello, Taj. Hi. Does that mean that it has to go to the downside to mean revert? No, it can mean revert, as is pretty much expected by the probabilities, not by random guessing. It's pretty much expected to go up at least a little bit from where it's at now, right? Probably over 100K again. But again, high time frames. I'm not trading high time frames, but it's good to know the big picture. Daily and 7-day time frames, those are very high time frames for me. Good to know the big picture. It's good to know that Bitcoin, for example, is in mean reversion to the upside. Now, again, it doesn't have to close to the upside, but the mean reversion to the upside. But at the moment, the probabilities are that it will. Why? Well, because for the next 30 days, the mean reversion would be to the upside. Okay. It's starting to get a bit closer to where the price action is now, about 30 days out from now. Okay. If you look at that 3012 RMLR, you'll see that about a month from now, the RMLR is quite close to where the price action is now. So if it takes that long, then the move up could be not so tremendous. But in the meantime, you've got a lot of days between now and then that it certainly could be a significant move up to complete that mean reversion if it does it in one fell swoop. And it certainly could move up 8 grand or 10 grand in a day. That would not be out of the range of probabilities at all, because obviously we've seen plenty of days of 7%, 8%, 10% or more, even in recent weeks and months and years. So it is not like Bitcoin is incapable of moving 10% in a day. It certainly is capable of moving 10% or more in a day. It could even move 15 or 20% in a day, not a problem. We've seen that happen before. Earlier during the mean progression, during the mean reversion, when I was telling you that the target high, the high point of the projected RMLR was at around 135K. Remember, I told you, as I always tell you, the RMLR is not, hello there, the RMLR is not a price predictor. It is a direction predictor for the future RMLR. So, and I told you, watch it day by day and see how the price of those estimates adjusts. Because we don't care about those estimated prices on the RMLR. We care to know on any given day where the RMLR is, and we care to know what the future direction of the RMLR is. Why? Well, because assets distribute away from the returns, from the mean of returns, and then they mean revert to the mean of returns. And specifically, the returns distribute away from the mean of returns, and then the returns mean revert to the mean of returns, and price action just follows, which is why price. All right. Yeah. What does this say? BTC. All right. Yeah. What does this say? BTC to 130 this cycle. 130, very high probability. I don't know what you mean by cycle. What's your time frame? There's a very high probability that Bitcoin will hit 130,000, but again, I don't care about that as a low time frame trader. I'm looking at like low time frame, 15-minute and under for trades. As an investor, sure, it could, whatever, who cares? It could hit 250, it could hit 500,000, it could hit 1 million. Who honestly cares? It's not relevant. As a trader, price is moot. The only thing that matters to me as a trader is, are my trades in the winning direction or not? If they're not in the winning direction, I get out of the trades ASAP, like immediately. If they are in the winning direction, then I take my profits early and often. And I'm not emotionally attached to my trades. I don't care what the asset does, up or down. I don't care, because it's irrelevant, right? It does not matter. Bottom line, the only thing it matters to is whatever I may be holding in my investment portfolio. That's it, right? And that is a long-term thing, and I don't care, and I barely look at it, right? because it doesn't matter to me, right? Because you don't invest for yourself the way I look at it. I mean, maybe you do, but I don't. I invest for the future, those that come after me, so that I leave something behind, right? Yes, in theory, I invest a little bit for myself so that eventually I can, when I hit retirement age and don't want to work anymore, then I can live off of that. But the point of investment, for me anyway, is not to invest for myself. It's to invest for those that come after me, to make sure that they have a secure future as much as I can provide it, right? So yeah, Bitcoin to 130K, absolutely possible, even probable. But does that mean it has to? Nothing has to happen, man. There are no guarantees. I can tell you that on low time frames, right? If you look at the ranges today on the VRE, right? I can tell you, obviously, at the beginning of the day, there's a very high probability we would test the central daily range, and it did, right? You know why? Because it's likely to hit that central daily range practically every day. Okay. If you're above it, it's likely to come down to it, which it did. If you're below it, it's likely to rise up to it, which it has also done. I tested it from both directions on different time frames. If you look at it, today you have an extremely narrow central daily range. So basically, when it touched the daily range, it basically tested the whole thing every time it touched it, because it's just such a narrow range. It's 0.05% of the asset's value, so it's tiny. It's like, whatever it is, $50 or something like that. It's a very small amount. So given that, right, we don't look at whether or not the asset is going to have a particular high in some long time frame. It's just not relevant, right? What's relevant is making sure that the low time frame trades go as expected according to the VEPs, which generally speaking they do. That's why at Alpha Trading we trade the VEPs, because the low time frames are where you have the most success in terms of short-term trades. And you could say to me, well, you don't get enough returns from all those tiny trades. What's the point? Okay, you can have that point of view. I would counter that if you're able to stack anywhere from 4 to 10 decent trades in a day, and you're able to make anywhere from 0.5% to 3% gains in a day or more, depending on the day's moves and all that stuff. But anywhere from 0.5% to 4% or 3% in a day is not at all uncommon if you're doing like 4 to 10 trades in a day. Okay. Now, what that means, if you're doing that, right, is you're actually crushing the market, because the assets, right, move insane amounts, and most traders are losing money because they're taking over leveraged positions. Right? They're taking positions they can't afford to lose, and they lose them. And meanwhile, professional hedge fund managers, professional traders working on Wall Street, like their target is like 2 or 3% a year. And they're considered a success if they make 2 to 3 or 5% a year. Huge success. 5%, 10% a year, insane success. If you're hitting 20% a year, you're like a hero. If you do more than that, you're like a legend. Okay? And if you do that consistently year after year, legendary status. Why? Because if you work in the markets 20, 30% a year over 20, 30 years, it's insane gains, right? But the thing is, there are plenty of traders who do that, especially when they trade the VEPs. And the bots do that at the high frequency trading firms, which is why they rake in billions of dollars of profit every quarter and every year. It's not an accident. They didn't just get lucky, right? They're trading the same math that we use in order to make those wins. And they trade them on super low time frames. We trade, at Alpha Trading, 15-minute and under time frames typically. Plenty of people within the community also trade higher time frames. That's fine, whatever. But we always tell people, don't swing trade. Whatever you do, don't swing trade. And we know people do, but we advise not to. Because if you're swing trading crypto volatility, you're begging to get wrecked, especially if you have any kind of leverage. Like if you're using more than 3x leverage, you're begging to get wrecked. Why? Because volatile assets that move 3, 4, 5% in a day easily, like without even batting an eyelash, guess what? They can also move 15, 20, 30% in a day. And they often do, especially on smaller assets, like if you're trading Solana or Litecoin or XRP or BNB or DOT or any number of the coins or anything that's less liquid than that, Pepe coin or Ape coin or whatever. These things can be moved 30, 40, 50%, 100%, 200% in a day. What happens if you swing trade something and it moves 200% in the opposite direction? And you're leveraged. Well, man, you're out before it even begins, right? You've been liquidated a long time ago, right? So that's why you have to be real careful not to swing trade volatility. That means don't sleep on your trades, is what that means, okay? Don't go to sleep at night with open trades, open positions running on your computer or on your, exchange, and just hope to come back tomorrow and be like, oh, it's probably fine. No, it probably isn't. It may be, but it probably isn't. It may be to the upside, and maybe your profits are to the upside, and maybe your profits are to the downside. You started racking up less profits, or even begun to rack up losses. In which case, not good, right? You don't swing trade volatility. Trading is really mostly about risk management, to be honest, more than anything, right? Like I talk about the VEPs a lot because it matters, because it's quantifiable, because you can measure your edge. It's something that traditional technical analysis traders cannot do. They don't have a measurable edge. VEPs traders have a measurable edge, but more than that, right, at Alpha Trading, what's the main thing we actually teach people? More important than anything, like it's literally 90% of your trade. It's risk management. If you don't have risk management, you got bupkis. Seriously, if you don't have good risk management, you've got nothing. You may as well just pack it up and go home, right? You may as well just throw darts at a board, see if you win, right? Because no risk management equals guaranteed loss at some point, and significant loss, right? We're talking, you're getting liquidated at some point. Is that worth it to you? Do you want to be liquidated? Do you want to get one of those letters from the exchange that says, dear, whatever your username is, thanks for your trading, business. At this time, we've had to liquidate your account because of the position. We had to call the margins on your position, and we've taken your money from your account, and we've taken, because you ran a unified or a cross leverage trade or a cross margin trade as opposed to isolated margin, we're taking the money from all your different accounts that are connected to it to pay for the account, to make sure that you don't owe us anything, and your position is liquidated, and who knows, maybe your whole account is liquidated. Because remember, on top of the liquidation, you pay a liquidation fee. Like there's a fee to pay for losing money. Doesn't sound nice, does it? It's not nice. You don't want that to happen to you. Okay? It's not fun. And I hear countless stories about people who get liquidated in the traditional TA world. I see them on Reddit. I see them on Twitter. I see them on YouTube. I see them in Discord. A lot of them in Discord because they're on in all those trading Discords talking about how they got wrecked. And it's painful, man. It's painful to read it, let alone to live it. Which is why we don't do high time frame swing trades of crypto. It's because doing that is nuts. And if you're going to use leverage, right, you got to have good risk management. If you're going to use any leverage, like I would never ever tell somebody to even consider using more than like 3x maximum. And even that, don't use any if you don't need to. Like, don't use any, zero leverage, right? Just spot trade. You'll make more gains over time. Because with leverage, you will lose more trades over time due to the nature of leverage, right? When a move on a volatile asset goes against you because of volatility and randomness, you will lose money. And the money you lose will equal or be greater than the money you made in a bunch of trades. Why? Because usually you'll start out cautiously, and then you'll get a bit more egotistical as time goes by. And eventually you start using some leverage, and then a bit more, and then a bit more, and then soon you're running 10x, 20x, 30x trades. And next thing you know, when a trade goes against you, boom, you lost half your trading capital in one trade because you were too cocky. Because you were so sure you were going to be right like the last 10 times. The thing is, when you're using leverage, you're a target. And you're in a big pool of targets. And when the exchanges see that you're down there in that target of liquidation money, guess what? They trade against you. They go and get your capital. And if you don't think they do that, I got news for you. They do that. Right? They literally have trading desks full of people whose job it is to go get your money. That's what they do. Literally. Right? They're going to go get your money. They're going to send you a nice letter. Thank you for trading. Thank you for your business. Do come again, won't you? And if you don't manage your capital carefully by managing your risk carefully, well, you are going to end up getting wrecked in a very nasty way. It's just not worth it. So that said, I highly, and I mean highly recommend not putting your assets on the line with swing trades, right? Using low time frame, using no leverage, learning how to trade the VEPs, being humble, being willing to make, being able to make 0.5% a day and work for it. Put in the effort, put in the time and effort to it. Like, even 0.5% a day, you have to realize, compounded over a year, is an insane amount of gains, okay? If you can actually trade every single day and make 0.5% a day every single day, I mean, you are so far beyond what professional traders are doing, you have no idea. So, again, that's why I say, be humble, not greedy. Take your profits early and often. Limit your loss. Don't be emotionally attached to your trades. And above all else, even above the VEPS information itself, right? Manage your risk properly. If you don't manage your risk, there's no point in doing any of this. It's all about managing your risk. Okay, guys, that's going to do it for now. Maybe I'll catch you later in the live stream. If you want, go to alphatradinghq.com/Discord. And at 5 p.m., the live stream should begin. Again, 5 p.m. U.S. Eastern Time. I don't know if I'll be in that one tonight. I'm usually not in the Sunday night streams, or at least not in the whole thing. Just because, for a variety of reasons. it tends to be also a time when I try to get some sleep, or I try to finish off doing things that I have to do that are not trading related in the middle of the night. So I'll catch you guys later. And until then, I wish you all happy trading. And get ready for a big week, because it looks like we're setting up for one. All right. Peace.